Good day, trader. My name is Smart FX. Welcome to my channel. So in today's video, we'll be talking about the fair value gap concept. Oh, that's not all. Fair value gap concept as an entry. I know people will be like, oh, in 2026, how can I be using fair value gap as an entry? All right, but that's not all. So today we'll be combining two things: SLP plus fair value gap concept as an entry. SLP means the structure, liquidity, and point of interest, right? So we'll be making use of three things on higher time frames. For you to take a trade on lower time frame, actually you need higher time frames, point of interest. You need to know the higher time frame bias, the directional bias. You need to have this understanding of where market is trading from and where market is trading to on higher time frames. So, for example, I want to take a trade on 5 minutes. I have to have higher time frame structures, higher time frame bias, right? So that is where the SLP will be used. That is structure, liquidity, and point of interest. So the fair value gap concept will be used on the lower time frame. All right. So I remember very well in 2022 where ICT mentorship talks about the fair value gap entry. The fair value gap entry is a very, very amazing strategy, even though it is being linked with New York Q zones, or it's been linked with the Q zones. And even that has been the way I've been trading it from that particular day from intraday strategy. If you go to my YouTube channels, I talked about the intraday strategy, so which means the fair value gap concept as an entry plus the Q zone. So which means that today's video, I'll be talking about the SLP plus the intraday plus the fair value gap concept plus the Q zones, because I can't take out the Q zones actually. So let's get into the video. So I'll be making use of this particular gold trade here, and the reason I'm using of this gold trade is because I gave it out live and I took it also. So I want to use something I gave it out. So which means I'm not just going on the chart and just looking for example anywhere. I gave out this particular trade and a lot of people saw it and they took it, and I will use it for an example. So this particular go trade, go sell limit. All right, let's go into the chart. So before we go into the chart, let me make a little drawing so that you can understand what you want to look out for. So let's say we have a buy trend, a bullish trend, right? We're having higher high, higher low. The market gets to a particular level here. Then we have an MSS. This is higher time frame, an MSS here. So when we have an MSS, that's the first thing, structure. So the second thing is what? Liquidity. So the first valid pullback is inducement, and that is liquidity. So the first valid pullback, the market comes all the way down anymore again. So my POI, let's say we have another block here. So uh, that will be the SLP, that is structure, liquidity, and point of interest. All right. So which means that when I go down to lower time frame, this will be my first valid target. So that would be my first valid target. So which means that this is what SLP means. So my entry concept, I'm not going to trade it because of SLP or something like that. So I will look for entry concept inside this particular level here. So I'll be looking out for entry concept. Oh, sorry. So inside this particular level here, the POI, I'll be looking out for entry concept, and my entry concept will be a fair value gap concept. So which means that first things first, it must be in the New York Q zone. The market took out the liquidity, then we have a displacement for MSS, then the fair value gap itself. So this is it here. Market took out a liquidity, we have a liquidity sweep, we have a sweep, we have MSS with displacement. Displacement is very, very important, right? And we have a fair value gap. So this is what we want to look out for in today's video. this is what you want to look out for. So this particular thing is what I want to look out for. So let's get into the chart. So the first thing on the chart I want to look out for is my SLP. So this part I can see from here the market is bullish because I am having higher high, higher low, higher high, higher high, higher low, higher high, higher low, higher high, higher high, higher low, higher high. We also have another higher high here. So we have higher lows. The market comes all the way down here to give me MSS. So we have an MSS here. Let me just write it. So we have an MSS. So you can see we have an MSS. So the first value pullback is inducement. So the first value pullback here is this high. So this is my first value pullback. After market breaks structure, the first value pullback, the market sells. So I'll be looking out for this particular order block here for my entry. So the order block for my entry, and also I have a, so the when market get to this particular engagement, the market did not get to the other block first. So this particular low high here is also an engagement. As long as market does not get to where I want market to get to, the POI. So every high market created is an engagement. So this will be our target on lower time frame. So that will be our valid target on lower time frames. All right, so that is the whole trade. You can see the distance between the POI and the liquidity is kind of very short on 1 hour, right? But if you go down to 5 minutes, it's going to be very, very large. So let's go to 5 minutes. That is where I took the trade from. So the first thing I'm going to do on 5 minutes, as usual, is to demarcate my New York Q zone. New York Q zone start from 8:30 New York time, 8:30 New York time to 12 p.m. 8:30 a.m. to 12 p.m. So this particular zone is where I want to see the sell. So I'll wait for market to give me sell. So the next market trade into the POI on 1 hour. You can see what market did here. I have a liquidity being taken out. Liquidity being taken out. Then market give me MSS. The MSS here is being taken or is being created with displacement. What is displacement? It means the way market break the structure with large candle. So you can see 1, 2, 1, 2. It was very, very fast. It is a very large candle. It is not a weak candle. I'm not talking about a weak candle. Okay, just breaking it with a weak. No, 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 no. So it's a large candle. Market break the structure. Then I have a fair value gap. So this fair value gap here is my entry. So you can see the 3 things is being fulfilled here. So put my stop loss here or here, and my TP has to be in the range. Most time I love trading internal to internal. So which means that I know that this line here is the draw liquidity on higher time frame, right? So I will put my TP inside. Like internal, I took a trade from internal structure, then I will take my TP from internal structure. It's kind of very, very relaxing, right? I know, but I know you guys will really want me to put my TP. Oh, let us take the old stuff, right? I understand. So if you go into the my view, so you can see the trade here. I took only this particular one, internal to internal, right? So let me show you the CP. As market was going, the market was going, yeah, having a sell. All right, I'm looking at the time. I don't want to exceed 10. All right, so you can see when market hit the TP, this particular, so you can see the way I demarcated everything, the displacement. I always put this emoji when I see a displacement, but it's kind of giving me the ICT vibes. I remember 2022 very, very well. It's kind of amazing time trading. I always go just trade on lower time frames, and yeah, we have losses too, but most times just sticking. Alright, so this is particular trade. Don't forget to like, share, and subscribe. Go into my subscribe to my YouTube channel. Yeah,